Hi there, welcome to Kneppy Invest. I think it is very important that we make mistakes as investors, but even more importantly is that we learn from those mistakes. If we don't learn from the mistakes we make, I think making mistakes is a mistake in the first place. So the best way we can become a better investor is actually to learn from our mistakes. And one of my biggest flaws or mistakes that I have made in the past is whenever I've been following a company over the long term and the share price is in an uptrend, and then I see an opportunity, what I think is an opportunity, to buy the company for a better, cheaper price after a significant drop in share price, I'm a little bit too quick to hit the trigger sometimes. Even right now, I will see share price fall by a significant amount like Appendix. We saw the share price of that company fall by 50% in one day, and I took a position because I thought the company was good value. But sometimes just because the share price has dropped 50% in one day doesn't mean the company is now good value. There's just new information that's come out. The market is digesting that information, and maybe the new valuation of the company is justified. So don't always think because the share price drops by a significant amount, the company is now cheaper or better value. There could be reasons behind the market punishing the share price of that company. And this is definitely true for the company I'll be featuring in today's video, Integrated Research. This is a company I've been following for about 8 or 9 years, and the share price was in a really good uptrend from about 2012 all the way to 2019 and 20. I think it even lasted to about start of 2021. However, the share price has been really punished over the past 18 months. And right now, the share price is at a 10-year low, giving this company a markup of $100 million. And I actually do think there is possible really good value for this company. But I'm going to remain patient because I don't think the story has finished for this company yet in terms of negative news. So what's been driving the share price down is continual downgrades for revenue and profits. And this has been going on for 18 months. And that's why the share price has decreased from a high of $5 all the way to a current share price of 58 cents. As we now look at Integrated Research chart, this is the monthly chart going all the way back to when the company listed on the ASX in 2000. It does seem like they might have listed at the wrong time during the height of the tech bubble, because the share price fell off a cliff in the next few years, all the way down from about $1.75 all the way to a low of $12.5. And then from about 2003 to 2011, share price of this company just went sideways. Now, during this whole period, this company was increasing their revenue, also increasing their cash flow. So this was a real business. And this can show you that over the past about, we'll say 8 years, we have seen the markets go on a tear. And a lot of this increase in the market value of a lot of companies is because of multiple expansion. Because if you go back to 2011, 2012, there were a lot of really good values on the stock market, and Integrated Research was one of those companies. And then between 2011 and 2018, this company's share price went on a run. In fact, it increased from about 25 cents to a high above $4. There was a little bit of a collapse in the share price during 2019. It fell from about $4 all the way down to $1.75. But then we saw another upswing in the share price, which also included the COVID-19 financial panic. And we saw the share price reach a high of about $4.90 towards the end of 2020. But ever since then, this company has been under pressure. I'm talking about the company, I'm talking about the share price, but not only the share price, also the financial state of the company is under pressure as well. So together, we have seen the share price drop from nearly $5 to a current share price of 58 cents. And it seems like every single month, the share price of this company has been dropping. On occasion, you'll see a bit of a pause in the drop of the share price. That is not an indication that the trend has changed. Definitely a downtrend in the share price. And the question we have to ask ourselves right now is how low share price can fall from here. But with a markup of only $100 million, this company is profitable does generate cash flow, although those two are under threat right now with the performance of the company. I will say, if the company can turn things around, $100 million for integrated research does look like good value. But the question again is, can they turn it around? And if we look at the financial performance of integrated research, this goes all the way back to 2006. This company had been growing revenue consistently from 2006 all the way to 2020. This is why I was following this company. A nice continual growth, consistent growth in revenue, and that also translated to cash flow from operations, which is the other thing I featured in this chart. That all came to an end in 2021. In fact, revenue dropped from 111 million to 78.5 million. But when you look at the cash flow in operations, it only dropped by a small amount, only from 24 million to 21 million. The other thing to take notice here is, even though we saw revenue climbing between 2016 and 2020, we actually saw a cash flow from operations drop from 2017 to 2020 from 26 million to 24 million. So it seems like some of the margins of this business was under threat between 2016 and 2020, and maybe that's coming into play right now. So this is one of the reasons why the share price of this company has been under pressure, just the underperformance of the company itself. Either towards the end of December 2020 or the start of January 2021, I actually did a video on integrated research, and this was in regards to 2 downgrades the company had released in one fortnight. You don't want to see downgrades come too quickly, but this company simply could not get out of the downgrade cycle quick enough back in December 2020. And both downgrades back in December 2020 was in regards to revenue and profit. So initially, for the first half of financial year 21, they were expecting $53.2 million in revenue. And by the second downgrade, they had decreased that to $34 to $37 million of revenue. So there was something seriously going wrong with integrated research all the way back then. Not only did they have to decrease revenue expectations, also profit expectations decreased from 11.8 million to range between $0 and $2 million. So the company was still profitable, but that profitability was under threat based off their expectations or their new expectations. And when I did that video back in late 2020, or more than likely would have been the start of 2021, this was the chart, and the share price had dropped all the way to $2.62. So I thought, since the share price had dropped from about $4.90 to $2.62, I thought there could be some good value here. But the only thing was, I was concerned about these downgrades. So that is one rule I have right now. Whenever you see a company release a significant downgrade, that is not the time to take a position, because the downgrade cycle can last a while. And for integrated research, it's been lasting for about 18 months. Now, there are some exceptions to that rule. I did see a share price of one company drop 50%, decided to take a position in that company, and that could be a mistake because the share price has dropped a little bit from when I take in that position, but I do see good value with that other company. So at this point in time, just because the share price had dropped significantly over the past month doesn't mean that represents good value. So just keep in mind, the share price at this point in time was $2.62. The share price now is 58 cents. Now let's have a look at some of the financial results, the last 2.5 years of the financial years. So looking at the first half of financial year 21 and the first half of financial year 22. Now, as you can see from the first few slides of this video, they did have some expectations in regards to revenue and profit. They hit those expectations, although in saying that, both revenue and profit fell towards the bottom end of those ranges. For instance, revenue was expected to be between 34 and 37 million. Revenue came in at 34.1 million. Profit was expected to be between 0 and 2 million. It came in at $129,000. So let's move forward to first half of financial year 22 results. These came out in February of this year, which is 3 months previous from when I'm doing this video. Revenue has dropped from 34.1 million to 32.3 million. That's not a good look. I'd like to see revenue climbing. I want to see revenue climbing. I also understand that sometimes revenue and profitability of a company can drop in the short term, but then you want to see it start increasing again. So we haven't quite seen that for integrated research just yet. but they were more profitable in this half year, came in at 1.8 million. I had a quick look at why they were more profitable, and it all had to do with tax considerations. When the company did release their half-year results, they also had a presentation, and on page 21 of the presentation, they did give some guidance. Now, they did give guidance in quite a few areas here, but I'm really going to go and focus on pro forma revenue and NPAT. So for pro forma revenue, they expected it to be similar to financial year 21, and NPAT, they actually mentioned here, they expect annual growth. So that's actually a good thing. They are expecting that NPAT was going to grow from the previous year. Just 3 months after the company did release their expectations, their guidance for financial year 22, they've had to adjust those expectations because more than likely management looked at the way the business was performing and came to the realization that the business was not performing as well as they expected. So even though this says May the 22nd downgrade, this was released on May the 16th, I just think I put May 22 in there as it is the year 2022. I was quite tired when I did this presentation. Anyway, there was no absolute numbers given in this specific downgrade, but there was some commentary, and the commentary was not the best reading, particularly for those shareholders who think that this company is really good value or was really good value before the release of this downgrade. For instance, in the first part of this downgrade, they mentioned it is currently difficult to predict statutory revenue for the year, although it is highly probable that it will not exceed the prior year. They also mentioned pro forma revenue, a more predictable and stable measure of underlying performance, is anticipated to be down in the range of 3% to 7% for financial year 22, down 7% in first half of financial year 22 when measured against the prior year. And remember, in that half year guidance, they did mention they were expected to be more profitable for financial year 22 compared to the previous year. Now, those expectations have completely flipped, and at the NPAT level, it is anticipated that the company will remain profitable, but for the NPAT to be below the previous year. They also mentioned in parentheses here that previous guidance was for growth, so it's nice that they've put that there. As we take a look at Integrated Research's daily chart, going all the way back to the start of 2021, when I last did a video of this company, this is the very definition of a downtrend in a share price. So not only is the share price moving from the top left to the bottom right, when you look at the two moving averages here, which is the 100-day and the 50-day, if I include a 200-day and the 25 days, the other two moving averages I do use, all are moving down through time. Not only that, there is a large gap between the 100-day and the 50-day moving averages here. And not only that, every single time the share price of Integrated Research gets in between the two moving averages, and particularly when the share price gets above the 100-day moving average, we see increased selling, and that puts pressure on the share price, and that's why the share price falls from there. So at this point in time, there is no end in sight to this downtrend in this company. I'd like to see a period where the share price just moves sideways, and it could move sideways for a long period of time. And if revenue and profitability of this company keep on dropping, and if profitability drops even further, this company will become loss-making. The share price could fall even further. So I want to see signs that the company is turning the business around. So even if I do think the valuation of $100 million does look really enticing, I need to see signs that the company is turning around. And that would be increasing revenues. That would be a really good first sign. And if we see increasing revenues, increasing profitability, and then we see a few half years of that, that could be the sign that the company is turning things around. And that's when the market might get excited about this company. And that's when $100 million might look really cheap for this company. So at this point in time, that might happen. But the other side of the story is revenues keep on dropping, profitability keeps on dropping, and share price keeps on dropping from here. That's all I have for this video on Integrated Research. Another downgrade, 16 months removed from that time in December, where they released 2 downgrades in 2 weeks. You never want to see 2 downgrades in 2 weeks. That tells you something seriously wrong is going on with the business. And right now, Integrated Research at 58 cents has a valuation of $100 million. I never thought this company would get down to that low. But just because the market cap looks really low, just because you might think this company is really cheap right now, doesn't mean it is, particularly if the company keeps on underperforming and expectations are not met. There may be more to fall in this company's share price. If you have any opinion on Integrated Research or maybe any other company on the ASX, I'd love to hear your thoughts, your comments, or even your questions. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.